Okay, so what we're going to do, so last week we talked about the first portion of chapter 3. And basically, this first portion really covered how throughout the period we record these journal entries or these transactions related to outside events that happen, outside economic events. But at the end of the period, there's some things that have happened within the company that we need to adjust, such as interest income that hasn't maybe accrued but we haven't reported, or interest expense from loans, or supplies, or prepaid rent or prepaid advertising. Do you remember all that? And we do all that then to come up with what we call an adjusted trial balance. What's an adjusted trial balance? Anyone remember?
The trial balance after you adjust, do the adjusting journal.
And what is a trial balance? What does it show?
Everything on the company.
With debits and credits.
Yeah.
All the accounts are listed and they show that, hi there, they show the debits and the credits. So let me see where I am. So this adjusted trial balance here is just after we've done all those transactions. Then we take every single account that we have, and if it's a normal debit balance, we put it in the debits. If they're normal credit balances, we put them in the credit side, which debit means left, credit means right, or for you guys, left, right. And we balance. Okay? That's where we ended up last week. Now, this week, what we're going to do is create financial statements based on this adjusted trial balance. Can you guys see it? Okay, it's up and running. So, what we're going to do is, remember, this whole process is to communicate to the end user information about a company. And we do that in the form of financial statements. So now we're at the place of finally communicating to the end user information. And what we communicate would be the financial statements, because it shows what's going on with a company. So we are going to prepare from the adjusted trial balance. We'll start with the income statement. Do you see how the income statement, the items down here, are what we use to create the income statement? The income statement has revenues and expenses. And those revenues and expenses are down here. We're going to pull these numbers and create an income statement. Okay? So when we prepare an income statement, we are going to take these items here in blue, the revenues and the expenses, to create our income statement. Then after that, we're going to create our statement of stockholders' equity. Then once we have that, we'll create our balance sheet. Now, guys, we have to start with the income statement first, and I'll tell you why. So our income statement shows our revenues and our expenses. Our statement of stockholders' equity shows these three items: the common stock, the retained earnings, the dividends, plus our net income from the income statement. You see why we need to do the income statement first? Because we need that in order to put that number into the statement of stockholders' equity. Then, once we've completed the statement of stockholders' equity, we can then complete the balance sheet, because we need the statement of stockholders' equity to plug in to the balance sheet. Okay? Make sense so far? So we're taking the income, the revenues and the expenses from the adjusted trial balance to create an income statement. Straightforward. Do you see how our net income here is 1,200? We then will take, because this was a brand new company, so we started with zero balances. We'll show our common stock. We'll show our net income that came from the income statement. We'll show our dividends. And we have a completed statement of stockholders' equity. This statement gives us the amount of common stock and the amount of retained earnings. We need both of those in order to complete our balance sheet. Then our balance sheet, all of this information here came from the adjusted trial balance. All of these liabilities came from the adjusted trial balance. But we took the totals of common stock and retained earnings from the statement of stockholders' equity in order to complete this. Does that make sense? So really, guys, once we've done the adjusted trial balance, it's easy to create these financial statements, okay? So what I want to do is let's go and find a problem so we can really get a picture of how this works. So here we have an adjusted trial balance. Okay, this is one of your homeworks, okay, for this week. So if you want to open up your computer and work, that might not be a bad idea. Here is the adjusted balance. The first thing they want us to do is to prepare an income statement. To prepare this income statement, we're going to take the revenues and the expenses, okay? So let me go here, try to get into student view so I can. Remember, guys, homework is to help you understand the concepts. So we're going to learn. Let's do it here. Is that all right? Let's do it here. Sometimes it's easier when you're doing it in a group. So here is our adjusted trial balance. Okay? Here's our adjusted trial balance. In order to complete an income statement, we're going to take our revenues and our expenses. So in this case, our revenues are 113.7. So I'm going to show here service revenues, 113,700. Then I'm going to take our expenses. Salaries expense, 42,400. Utilities and interest. We'll try to make this smaller. So I started with service revenues. Can I make my screen smaller? I'm so used to Dell's. No, we'll just work with what I have here. So you see the service revenues, 113.7. We put in all of our expenses for total net income of 8,900. Does anyone have any questions how we came up with that? How's everyone doing? Make sense? Okay. Now, remember, we need this 8,900 in order to fill in the retained earnings. So we want to add, can I go in here? Answer is not complete. I know that. So our beginning balances, does it tell us?
You gotta return to the question.
Oh, I'm so sorry. No wonder. Thank you. So prepare a statement of stockholders' equity. It's letting us know that during the year, the company issued an additional amount of common stock of 11,000. And that 11,000 is included in this $54,000 figure. Okay? So this 54,000 includes this 11,000 that was issued during the period. So we know one thing we need to do, retained earnings, or excuse me, common stock of 11,000 was issued during the period. If our ending balance here is 54,000, what does that mean our beginning balance would have been? 43,000? Okay. It also tells us that our retained earnings is 15,400. So we'll show retained earnings of 15,400. Won't we add net income of 8,900? And we receive that from the income statement. So do you understand why we have to do the income statement first in order to then complete the statement of stockholders' equity? Did we pay any dividends? Do you see any dividends here? No. But if we did pay dividends, they would be here as a debit on the trial balance. Dividends would be a debit. It doesn't show any, so we're not going to be subtracting any dividends. So our 15,400 plus our 8,900 gives us, is it 24,300? Did I do that right? 58,400. We carry over all these numbers. Four, 70,830. Does that make sense? How are you doing, guys? Can you tell I need feedback? It's early. You guys are tired. But just to say yes or shake your head or just go so I know to continue. Good? Now, guys, we need the common stock of 54,000 and the retained earnings of 24,300 to complete our balance sheet. Okay? So, our stockholders' equity, the common stock, what did I just tell you it was? 54,000? 54. And the retained earnings, retained earnings, 24,300. We need that in order, come on. $54, 24,300, 78,300. So we need 24,300. We need that from the statement of stockholders' equity to complete this section of the balance sheet. So the balance sheet in the order of the trial balance, adjusted trial balance, will start with cash, accounts receivable, supplies, and prepaid rent are all current assets. Those resources will be used up within a year, okay? Or they can be used up within a year, generally are. I shouldn't say used up, but the resources will are able to be utilized within that year's time. Cash of 5,400. We've got accounts receivable of 4,400. Supplies of 2,400. Prepaid rent of 6,400.
Came up with the count.
Thank you. Okay. So our total current assets so far, 18,600. Then our long-term assets, building. So building of 21,400. I'm sure it's 21,400. That sounds small for buildings, 114,000. Less our accumulated depreciation of 21,400. Let me just make sure they want us to do it that way. Yep, they do. Okay. Then we have, that's it. That's all we have. So let's just see net building, or do we? So our total, let's see if I should say total long-term assets. Long-term assets. I don't think it has that. Every book does it a little different. Let me just make sure. Total current assets. We'll go back. I somehow feel like I need to put in total long-term assets. Okay, thank you. You don't. Thank you. Okay. Thanks. Now our current liabilities, we've got accounts payable of 3,400, salaries payable of 4,400, accounts payable 3,400. What was the other one? Salaries payable of 4,400. We've got utilities payable of 1,100. Then it tells us here, the notes payable is due in 4 years. Since that liability does not need to be satisfied in the current period, it's a long-term liability. So that notes payable of 24,000 is going to be a long-term liability. Okay? Do we balance? Do our total assets equal our total liabilities plus our stockholders' equity? They do, guys. Does that make sense? Okay. You see how it's relatively easy to complete these financial statements? As long as your adjusted trial balance is correct, we're just going to take those numbers right off of it. Okay? Got it? Okay. Now let's go back to the PowerPoint. A statement of cash flows basically only deals with transactions that involve cash. So cash receipts and cash payments are organized in a statement of cash flows. We separate it by the operating activities of a company, the investing activities of a company, and the financing activities of a company. So operating is why the company's in business. Investing activities deal with borrowing money, investing activities deal with purchasing long-term assets and selling long-term assets. Financing activities involve anything to do with common stock, purchasing common stock, paying dividends, and loans, and paying back loans. Okay, that's it. What about this, guys? Which financial statement would include a line for net income? Correct. A is correct. B is correct. So do you see it? The answer is D. Because we need the income statement, and we're going to take that net income from the income statement and use it in the statement of stockholders' equity. It's not a part of the balance sheet because it's already in that figure of retained earnings. Okay? Now, we've completed these financial statements. But think about it. We need to get ready for the next period. And income statements, the net income statement, we don't show, oh, since the beginning of time, we've made $4 million and our net income since the beginning of time is $3 million. We don't do it that way. We show our revenues for just the year or just the period. We show our expenses just for the period. And our net income isn't since the beginning of time, it's just for the period. So what we need to do is close out some of these accounts. we close out the accounts we call temporary accounts. Anything to do with revenues, we zero out. Anything to do with expense accounts, we're going to zero out, and dividends also. But for the most part, we're going to take our revenues and our expenses and we're going to zero them out so we can start fresh the next period. So the closing entries basically transfer the balances of all the temporary accounts to the balance of retained earnings. Think about the statement of stockholders' equity. We started with a retained earnings balance. We add our net income. We subtract our dividends to come up with an ending balance in retained earnings, don't we? So basically what we're showing is we're going to take the revenues, zero it out and transfer it to retained earnings, take our expense accounts, zero it out to retained earnings, so we can start fresh the next period, also dividends. So if our revenues were at 7,200, we're going to zero out those revenues. So debiting service revenue zeroes it out because revenues have a normal credit balance. We're going to put them into retained earnings. All of our expenses have normal debit balances. So when we credit them, it's going to zero everyone out and put it into retained earnings. So by doing this, our retained earnings increases, which is what showed up on the statement of stockholders' equity. So, and then if we pay dividends, we're going to zero out those dividends also. Basically, what we're doing here reflects what happened on the statement of stockholders' equity in the retained earnings account. So we started the year of retained earnings with a zero balance. Now, the statement of stockholders' equity shows $1,000 retained earning balance. By doing this, do you see how that's how we come up with our $1,000 balance in retained earnings? Students sometimes think that closing entries are meant to reduce the balance of retained earnings to zero. Retained earnings, that account's a permanent account. That represents the accumulation of all income minus expenses minus dividends since the company began. Okay? So let's look at recording some of these transactions. We're not going to worry about that one. I'd rather just stay focused on this. Which of these accounts would not be closed during the closing process? Meaning we only close temporary accounts. Retained earnings is a permanent account. The only temporary accounts that we close out, any revenues, any expenses, and dividends. That's it. Make sense? Okay. Here we have on November 1st, the company borrows $15,000 from a bank. The loan requires principal and interest at 10% to be paid on October 30th. We're not going to create an adjusted trial balance because we did that last week. Don't need that. Post-closing trial balance. So once we have closed out those revenue accounts, the expense accounts, and any dividend accounts, we will then create what's called a post-closing trial balance. Now, if you think about it, since all of the temporary accounts are going to be zero, A post-closing trial balance will only have all the balance sheet items in them. Do you see that this post-closing trial balance, there's no revenues, there's no expenses, there's no dividends. Why? Because they all were zeroed out and they all went into retained earnings. Okay? So know that a post-closing trial balance will never have any temporary accounts shown because they're closed out. Okay? Which of the following accounts would you find on a post-closing trial balance? Just retained earnings. Revenues, expenses, and dividends are all zeroed out. So this particular exercise wants us to look at these various accounts. And basically, they want us to figure out which of these accounts do we need to zero out. Well, we want to zero out our revenues. So we're going to debit our two revenue accounts. Our service revenue and our interest revenue will debit and will credit it to retained earnings. That closes out our revenue accounts. Our expense accounts, to close them out, we're going to credit those. And we'll debit the total to retained earnings. And to close out our dividends, we're going to credit that also and close that to retained earnings. Okay? So do you see, after we've done all those closing journal entries, our retained earnings balance is going to be $43,000? And that will match the statement of stockholders' equity. Let's go and work on, let's go back to our problem we were working on here. Here's our balance sheet. Okay? So it gives us the year-end financial statement of Gold Hunter Financial Services is shown below. Then it tells us, here is the statement of stockholders' equity. And here is the balance sheet. It wants us to prepare the closing entries. What are we going to do here? Which of these accounts are what we call temporary accounts that we're going to zero out? Expenses, revenues, and dividends. So those are the accounts we are going to close out. Do you guys see right now that retained earnings on our statement of stockholders' equity is sitting at $40,900? By closing out those accounts, it all flows into retained earnings. So we can start again. So record the year-end closing entries. We're going to debit our service revenue for $80,700. And remember, we debit it because it has a normal credit balance. So to zero it out, we're going to debit it. That make sense? Then, to zero out all of our expense accounts, since our expenses have a normal debit balance, we're going to want to credit those. So we'll debit our retained earnings, and we're going to credit salaries, supplies, rent, and delivery. So our salaries, 48.2, we'll credit it. Supplies, 8,300. Rent, 6,700. Delivery, 2,900. And what will we debit to retained earnings? 56.5. 63, 2, 66, 1. I'm going to just let you sit on that. And then when you're done, just kind of go, I'm done. Can I move on? So now, when they want us to prepare a post-closing trial balance, this will only be permanent accounts, the balance sheet accounts, such as cash of 5,800, accounts receivable of 8,400, land is 102,000. Accounts payable is a credit, so we're going to put 12,300 on the credit side. Stockholders of common stock, 63,000. And retained earnings, 1,039. That's it, guys. Trying to think what else. I need something here. Total. Totals? I, I make it too, I make it more difficult because I know this program can be so frustrating. So our total debits equal what, guys? 102 plus 13, 14. I'm sorry.
Oh,
Okay, guys, I'm wrong. So I have cash, accounts receivable, oh, retained earnings is 40,900. Is this making you guys feel a little better? No, because I'm screwing up. Okay, look. Got it? Any questions on how this works? This is easier than last week, isn't it? I just don't know how to break up these 2 weeks because it's too much to do it all in 1 week. But last week has a lot more into it. Okay? Yes. Always. But did I not do that?
I think also the ones that we have is for the different ones, so it'll be different numbers.
Are your numbers different?
Yeah.
I'm sorry, guys. But the concept is the same. Okay? Okay? Is this helpful to go through this homework with you guys? Okay. Let's take the next one. Jaguar Auto Company provides general car maintenance to customers. The company's fiscal year end is December 31st. The December 31st, 2024 trial balance appears below. Okay, so we've got all the debits and the credits. Then it goes on to tell us, here are the adjusting year-end balances, journal entries. Okay. Enter the unadjusted balances from the trial balance, post the adjusting entries, and closing entries to the T accounts. Well, number 1 and 2, enter the unadjusted balances, then post the adjusting. Then we prepare an adjusted trial balance. From that, we prepare an income statement, statement of stockholders' equity, and balance sheet. Then we record the closing entries and prepare a closing balance. We're doing the whole thing. Okay? This is the end of the accounting cycle. This is the whole shebang of the first and second week here on chapter 3. I'm just trying to think of the best way. Would it be helpful for you guys if I did it on the board, or is it okay to do it in this McGraw-Hill? Do you care? Okay, this is fine to do it here, so you'll have it to fall back on. So this is the whole process. Now, thank God we have software. But to tell you how old I am, my first job out of school in 1982, I worked actually my first job was working at a bank, but when I went to work at this mortgage company, back then, the Apple I used cost back then like $4,000, and it had a floppy drive. Do you guys know what I'm talking about? One of these big, that's how you saved your paperwork. So all of this, I was able to use Excel. At the time it was called Lotus, but everything I did was by hand. So fortunately, you guys don't have to do this by hand, just on your homework. Thank God for QuickBooks and all the software that makes our job so much easier. But for this problem, Thank you. For this problem, they're wanting us to do it by hand so we understand the process. Okay? So, cash. Do you see the trial balance before any adjusting entries for cash is 103? I'm going to put that 103 right here. Okay? So I'm going to follow it. It's a little tedious for you guys, but I'm going to follow it as they ask me to. The next accounts receivable, the balance is 17.5. I'm going to show that here. Okay? Next, supplies, 28,000. Here's supplies, 28,000. Got it? Next, prepaid insurance, 25,000. Okay? Next, am I going too fast? Next, equipment, 105,000. Next, accumulated depreciation, $47,000 credit. This is where you can mess up. Make sure you go $47,000 credit. Okay? Next, accounts payable, 13,500. Credit. Okay? Next, deferred revenue, 60,500. Now I skipped over salaries payable because it's a zero balance in the unadjusted trial balance, but we'll have an adjustment for them for that. Okay? So beginning balance 0. Next, salary, interest is 0. Notes payable, 36,000. Common stock, 58,000. Credit. Next, retained earnings, 11,500 credit. Next, dividends, a debit of 5,500. And I don't mean to belabor this, but the biggest problem you're going to have is when you go and transfer your numbers, you accidentally change a credit to a debit or a debit to a credit. Okay? So always go check your work. See what I'm saying? Just to make sure you didn't do that. Because guys, we're human. When we're dealing with numbers, it's going to happen. Okay? Retained earnings, dividends I did. Service revenue, 237,000. Service revenue, a credit, 237,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. 37,000. Salaries expense, 166,500. $166,500. Next, utilities expense, 13,000. All of the others would be zeros. And I don't know if they're going to mark it wrong if you don't put in a zero. I'm just putting in a zero. Okay? They want a zero. Okay, guys? Now, we have posted everything to the unadjusted trial balance. Now it says post the adjusting entries. So what we'll do, the adjusting entry for A, they are showing depreciation on equipment or a building. Let me just see what did we have? Equipment. We are showing a debit to depreciation expense of 10,500. So we'll go and find that expense. Depreciation expense, 10,500. Adjusting A, 10,500. And we'll credit accumulated depreciation of 10,500. Okay? And I believe they want, if it's a credit, they want it on this side. Let me confirm that. Yep. Okay? So we did the first adjusting entry. B, salaries expense and salaries payable, 4,500. So salaries expense, B, 4,500. Salaries payable, $4,500. Got it? Next, C, interest expense, 1,500. Interest payable, 1,500. So we'll go to our interest expense. Adjusting C, 1,500. Okay. And interest payable, $1,500. Next, insurance expense, 20,500, and we'll credit prepaid insurance of 20,500. So we'll go to our prepaid insurance, 20,500, and we'll go to our insurance expense. $20,500. How you guys doing? Good. Supplies expense, 22,500. We'll credit supplies, 22,500. Okay? So we'll go and find our supplies. Credit, adjusting entry E, 22,500. We'll go to our supplies expense. Okay. I'm doing this with you guys because this can be one of those problems that frustrate the heck out of you because you make one mistake. So I'm kind of walking this along with you to show you it's all doable. The last one, deferred revenue, 15,500 debit. Credit service revenue, 15,500. So we'll debit our liability, 15,500, and we'll credit service revenue, 15,500. Okay? Are we doing okay now? So let's just check our work, make sure I didn't screw something up. Looks like we're okay so far. Now that was step 2. Step 3, prepare an adjusted trial balance. So we're going to go down here for step 3, and we're going to put in, thanks, I learned. We're going to go and put in our cash, right now is 103, our accounts receivable 17.5. So I'm going to go down here, cash, $103, accounts receivable 17.5. Then we've got supplies right now is at 5,500. Do you see why? Because of our adjusting entry, we have a balance here of 5,500, prepaid insurance 4,500. Supplies 55. Okay. Equipment is 105. Accumulated depreciation is 57.5. Remember that accumulated depreciation is a credit. Okay. Okay, guys. Accounts payable 13.5, salaries payable 4,500. These are all credits. Oops. Deferred revenue 45,000. Interest payable 1,500. Okay. Accounts interest payable, 15, okay. Notes payable, 36,000, common stock, 58,000. Okay. Retained earnings, 11,500. Dividends, 5,500. Remember, dividends are a debit balance. Okay. Next, service revenue, 252.5. Salaries expense, 171. Okay. Next, depreciation expense, 10.5. Insurance, 25. Supplies expense, 22.5. Utilities expense, 13. Interest, 1,500. 22.5. That utilities, supplies, and interest. Do I balance? So that just helps me know I got my debits and my credits balanced in the right columns. Okay? Just be very aware if you don't balance, to make sure that you didn't accidentally put one in the wrong spot. Okay? Now, it says, from this adjusted trial balance, we're going to prepare an income statement, statement of stockholders' equity, and a balance sheet. What are the numbers we're going to use for an income statement? Revenues and expenses only. So do you guys see at the bottom here, we've got the revenues of 252.5 and all the expenses. That's all we're going to use to create our income statement. Okay? So our service revenues, 252.5. And then we're going to have salaries expense. $171. Shoot, I wish I could remember them better. Then we've got 10.5, 25, 22.5. Remember, depreciation, insurance, utilities. 10.5. Okay, what was the first one? Thanks. And the next one? The next one? No. Utilities, supplies, and interest. 13. So our 252.5 minus our 239 gives us 13,500. Just check to make sure. What did I do wrong? Utilities expense, supplies expense. Utility, okay, so I put them wrong in here. Utilities expense is what? Let me see.
So if you screw one thing up, you screw the entire problem up.
Well, it's not looking real good here, is it? Utilities is 13,000. I might have said 13.5. What did I do wrong? Oh, utilities. And okay, what did I do wrong? Utilities expense 13, supplies expense is 22.5. See, I was trying to think on my own. Wait, so I got these wrong too, right? Yeah, so I have them just backwards. Sorry, guys. So utilities is 13, supplies is 22.5. Okay. Hence why I'm doing this to show you can mess it up if you go too fast like I do. Does that make sense so far? So we did the income statement. We need that net income of 13,500 in order to complete the statement of stockholders' equity. So we're going to add the net income of 13,500 add net income. Oh, let me put it over here. Add net income, 13,500. So we need to go back and look at what the beginning balances were. We didn't add any more stock that I see. So we have common stock of 58,000, retained earnings of 11.5. So we start with common stock. Gosh, 58 and 11.5. 58 and 11.5 is 59.5. Did we add any stock? I don't think so. We did add net income. Did we have dividends? 5,500, right? $69.5. Would you believe I'm just doing this on purpose. $11 plus 30, so 25,000 minus 55, 19,500. 58, 68, 78, 77,500. Okay. Absolutely. So our net income is our revenues minus our expenses. It gave us 13,500. We are going to plug that 13,500 into net income in the statement of stockholders' equity. We started with our beginning balances. We added our net income. We subtracted our dividends to get our ending balances of common stock and retained earnings. Okay, guys? Now, we need this 58,000 and this 19,500 in order to complete our balance sheet. Okay? So down here, our stock 58,000. $19,500. Right? Let's just make sure I did it right. 77,500. Yep. So in order to complete the balance sheet, we're going to take everything else from the adjusted trial balance, aren't we? So if we go to the adjusted trial balance, we will see cash of 103, accounts receivable of 17,500. Supplies of 5,500, prepaid insurance of 4,500. Supplies, prepaid insurance, okay. Equipment of 105, accumulated depreciation of 57,500. Equipment 105, okay. So far, our liabilities, accounts payable 13,500, salaries payable 4,500. Okay. Deferred revenue 45,000, interest payable 1,500. Notes payable, 36,000. We balance, but let's check my work to make sure I didn't, okay? Are we good so far? Now, then they're going to it asks us to record closing entries. What are we closing? We're closing everything on the income statement and we're closing the dividends. So the income statement, we will close all of these figures. The 252.5 service revenue, okay? Close the revenue accounts. And remember, since service revenue has a normal credit balance, we're going to debit it and move it into retained earnings. Okay? The next is to close out all the expense accounts. So we have a salaries expense, we have a supplies expense, we have an interest expense, we have, I think, an insurance expense, utilities expense, interest, salary, supplies, insurance expense, depreciation expense. So let's go and pull those numbers. Okay, depreciation expense, someone remember 10.5. Insurance expense, someone remember 20,500. Utilities, someone remember 13,000. Thank you, thank you. Okay, got it? Boy, that will make it so nice. Okay, salaries expense. Supplies, 22. Interest, 1,500. Utilities, insurance, depreciation. And we're going to close all that out to retained earnings of how much? I did it totally the wrong way. They're normally debit balances, right? So I need to credit them. No, it's here. So technically I should have retained earnings up here of 239 because your debits always go before your credits, remember? And salaries expense was what? 171? Do I balance? Insurance expense is what? Of course. Thank you. Okay. So now we balance here. Now the post-closing trial balance will only consist of all your balance sheet items. So would you please take a picture of that? So the post-closing trial balance, there are no revenue accounts left, no expense accounts, and the dividends are zeroed out. So now, finally, oh, so now we can just create a post-closing trial balance. So our cash, our accounts receivable. How much is the cash? 103. Accounts receivable. Next. 5,500. And next. Okay. Yep. Next. We should do more assets. Equipment. It's okay. Because you keep the assets together. Accumulated depreciation. Okay. Yeah. Mm-hmm. 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 Okay. Okay. Thank you. So if we take our assets, 208 and 10, 218 and 17.5, 218, 28, 238, 236, 237. Oh, they did it for me. I was off a little. Do you see ultimately, guys? That is the entire process of the
I think there was a journal entry you didn't do.
okay, that's why it's saying it isn't complete.
Close
Into retained earnings. Oh, my dividends I didn't close into retained earnings. But I thought you said my interest expense is 1,500, insurance expense is what? Okay, it's okay. So here, I got to do it. Thank you. Insurance expense. And I probably didn't do my did I close out my dividends? That's probably what I needed to do. Close out my dividends. So I will debit retained earnings, credit my dividends were they 5,500? The dividends were 5,500. So I'll close that out. And we will balance. Okay? But here's the deal. What you have just answered is not complete Okay.
Yeah, the T account.
That's what I still have to do. Yes. I have to put them back. I have to post them. I'm not going to do that, okay? So let me exit it and show you, exit now. So ultimately that assignment, if it comes back to the same one, here, let me go back.
You get like partial credit if we
Yeah,
get like 78%.
of course.
you get one.
Absolutely. Absolutely. This is a long problem. So just know it's tedious, okay? I will tell you right now. I'll tell you. If no one has taken the quiz, I can adjust it. So for that problem, yeah, you're right. It just comes up in a different grouping. So I apologize for that. But ultimately, I needed to do the post-closing trial balance or post-closing journal entries where it would zero out all my revenues and expenses and dividends. I will let you know right now. Any questions on this chapter? How's everyone doing? I will make sure you do not, as long as no one has started the quiz, I can change it. If someone started the quiz, I can't.
It was for week 2.
Quiz week 2, nobody started it, so I can change it. Okay, I will make sure you do not have a problem like that. Okay,
There was a problem like that on my week 1 quiz.
Yeah, the week one.
The whole thing. And like with ending balances and closing it.
thank you for telling me. You know, guys, what happens, there's a big bank. So as you can tell here, we've really worked to narrow it down. Instead of having 400 questions to choose from, we've only narrowed, you get 11 out of 39. And so we try to make it to where that doesn't happen, but thank you for telling me. Did it harm you?
Oh yeah, I got like a 69% on the quiz.
Okay, email me for chapter 1. If it affected you, that problem, please email me because I'm not going to remember everybody. Okay, email me and say that affected me, and just say 20 this class 2125, and I will adjust it for you. That's not my intent to cause those kind of issues. Okay, please email me, otherwise I won't know.
Most of them I just.
I'm
Yeah.
so sorry. I'll give you full credit for that, everyone, or I might just go. I don't want to harm someone who got it perfect, you know, so that's where the challenge is. But that just doesn't seem like a fair question. So email me and I'll give it to you. Okay. This is about learning. This isn't about causing stress. And if you ever feel something's unfair, email me.
Yeah, it took a whole hour and a half to do it.
Not right. I'm sorry. Okay. So, here is so just so you know, for week 2 quiz, they have you preparing an income statement, statement of stockholders' equity, and balance sheet. Okay. Multiple choice. So there it looks like there's just one big problem. Let me just go back and try it again. Okay. So it looks like there's one problem. I'm just going to exit out of there. And then I'm going to go back. Preview. So everyone's going to have one of those problems. Okay. And then multiple choice. Do you see what I'm saying? Everything else is going to be multiple choice. So know You are going to have one, not all those post-closing, but just an adjusted trial balance where you have to do 3 financial statements. Cool, guys? Okay. Again, just to reiterate, for those of you who had an issue with chapter 1 quiz, email me. Just so that way I respond to you and say, done, adjusted. Otherwise, if you give me a list of names, you know, I won't keep it organized. Any questions on this chapter? Any questions with what you need to do this week? The end of the review, the homework, and the quiz. The quiz, apart from those 3 financial statements, all multiple choice. Do you want to go over what the multiple choice would look like? I am sorry. I'm getting email here. I'm getting.
Probably from us.
Are you guys emailing me already? Thank you. Do it though. Okay, that's what's happening. Okay, so here are some examples of the multiple choice. Which of the following best describes the information reported in the income statement? Revenues and expenses, right? Does that make sense? Next. A classified balance sheet shows subtotals for current assets and current liabilities. It does. It also should show subtotals, or the totals of total assets, and then it'll show total liabilities plus stockholders' equity. Right? Contains confidential information, shows changes in assets, liabilities, revenues, and expenses. No. Shows only current assets and current liabilities. No. Okay. Next. And guys, you know, if there's only 39 questions, you're already learning what the 10 of the answers are. The deferred revenue account is shown in which statement? What is deferred revenue? A liability. If you think it's a revenue account, it'll mess you up, won't it? But it's a liability. It's the only account that's called revenue that's not a revenue account. The entry, okay, guys. Sorry. The closing entry for expenses includes a debit to, think of this. What is the normal balance of expenses? Debit to retained earnings, because DEA have normal debit balances, dividends, expenses, and assets. So to zero them out, you're going to credit those expenses, which means you debit the asset. Got it? Next. The following financial information is from Shovels Construction Company. What is the amount of current assets, assuming the accounts above reflect normal activity? So guys, what are current assets? Cash, accounts receivable, supplies, and any prepaids, right? So if we have cash, accounts receivable, and supplies, won't that be your total? 10,500 plus 40 plus 9,500.
Isn't a building asset?
But it asks us current assets. The building is an asset. It's a long-term asset. Do you understand the difference there, guys? Next, which financial statement provides information at a point in time only? Do you remember me talking about a snapshot? The income statement is over the year. The statement of stockholders' equity shows what happens over the year. The balance sheet's just a picture. At the end of December 31st at 5 p.m., here it is. January 1st could change totally because of a new transaction. Make sense? Next. The ending retained earnings balance of Juan's Mexican restaurant chain increased by $3.2 million from the beginning of the year. company declared a dividend of 1.3 million during the year. What was the amount of net income during the year? Think about it. Under retained earnings, beginning balance plus net income minus dividends equal the ending balance, right? So if they're saying it increased 3.2 million, but they paid dividends of 1.3, didn't the income have to be 4.5 million? Yeah, no. The following table contains financial information for Dillon Incorporated before closing entries. What is the amount of Dillon's total assets? Then we would include building, but don't forget accumulated depreciation in there, guys. Cash, supplies, prepaid rent, equipment. That's it. They didn't put in accumulated depreciation, so good. Okay? Bless you. Does this make sense? What is salaries expense? It's an expense account. It's not an asset. Okay? Next. In the first 3 years of operations, Lindsay Corporation reported net income or net loss of 150,000, a plus 100,000, and a plus 250,000. At the end of the third year, Lindsay Corporation had a balance of 120,000 in its retained earnings account. What is the total amount of dividends Lindsay's Corporation paid over the 3 years? Wouldn't we take the minus 150 plus the 250 and 100? So that'd be, so you've got a net of 200,000 there, right? And if they had an ending balance of 120, wouldn't you take that 200,000 minus the 120 to give you dividends of 80? Right? No yawning allowed. Why is yawning contagious? Oh boy, okay. Next. The following information before closing entries. So they give you cash, supplies, prepaid rent. Those are assets. They give you salaries expense, which is on the income statement, equipment, service revenue, miscellaneous expense, dividends, accounts payable, common stock, and retained earnings. So you know the common stock is 68,000. And you know the retained earnings starts with 8,000 here. You'd add your revenues, you'd subtract your expenses, you'd subtract your dividends. So you'd know the ending balance of retained earnings has to be 10,500. Okay? So the total stockholders' equity is common stock plus retained earnings. So what this problem is making you do is take your beginning retained earnings, go and add your net income from your income statement, and subtract your dividends. Make sense? That's it. Okay? I think you'll do well. If you have questions, you can post in the discussion or you can email me. I'm here to help you. Okay? Next week, we meet on Zoom. So I'll send out a message right now and let everyone know. We'll meet on Zoom next week. Any questions?